Hey traders, how's everybody doing? It is Friday, June 20th today, and just wanted to make a new video talking about a couple of things that were interesting in my trades today. So it's like I always say, like whenever I come across something that seems like it would be a little bit of a new angle to cover, that's when I'm going to do a video. And today was a perfect example of that. And the main thing that I wanted to get to today, this is just a fact, like whether you want to believe this or not, it's simply a fact. And that fact is the results of your trades will always be a combination of your skill and luck. And if you believe that there's no such thing as luck, I mean, you can believe that. I disagree. I think that luck is very much a thing that is real. And you could say, well, you create your own luck. To which I would say, yes, you create your own luck. That is called having skill or not having skill. So if you are skilled at something and then you do good at that thing, you have essentially created your own luck because you became good at a thing, and then guess what? You did a good job at that thing. So that's sort of what I mean with creating your own luck. But no matter how good or bad you are at something, there will always be luck that will exist outside of your ability to control it. You know, I mean, we can't control everything. There's a lot of things that happen in the world every single day that we have absolutely no control over. And today I made a trade on AMD. I traded SPY also, but main trade on AMD that went really well for me. And I think partially was because of my own skill level, and partially was because I was the beneficiary of some good luck over the last day. And so what do I mean by this? Well, I'm going to do a screen share in a minute, and I'm going to put up an actual screenshot of the chart on AMD today, focusing on the 5 minutes before and the 5 minutes after the open, which today were very consequential. And it's another reason for making this video today is to really sort of focus on the fact that the few minutes before the day opens and the few minutes after the day opens are always extremely consequential. And you can always make or lose a lot of money in that time frame. And that's why, the very beginning of the day is so important. But back to talking about luck and skill and the intersection of both. So 2 days ago on Wednesday, I traded AMD, and I did make some money on AMD early in the day. I had a successful trade. I can't even remember exactly how much money I made, but it wasn't a really big profit. It was in the hundreds of dollars. I think I made like $400 or $500 on the AMD trades that I made on Wednesday. But then the point is I had a number of AMD contracts that I kept open, and I kept them open into the afternoon, and they had started to lose value in the afternoon. So even though I had made a profit on my AMD contracts that I had closed that morning on Wednesday, the few remaining contracts that I held open had been losing me money at the end of the day on Wednesday because price dropped out. If you go back and look at Wednesday's chart on AMD, you'll see that. But instead of closing the remaining contracts for a loss, I held them open. And I knew that that was a gamble. Another thing that I say all the time is you have to be willing to accept risk. And if you can't accept any risk at all, you shouldn't be day trading at all. It's just what it is. I mean, you have to be okay with accepting a certain amount of risk in your trades. Now, that's certainly not to say that you should be stupid and go like way, way above your, capacity to handle potential big moves to the upside or the downside. Like the amount of contracts that I held open, I think it was just 4 or 5 contracts on AMD that I had held open. And so that's not a giant amount of contracts. Like there's no way that I would have done this holding open 30 contracts overnight. I would never do that. Maximum 4, 5, maybe 6 contracts held open overnight. If you think that it's going to come back around and do what you thought it was going to do in the first place. So anyway, yesterday, here's where the good luck for me came in. So one of the reasons why everybody was freaking out and why the market just fell out so hard on Wednesday is because of the whole Israel-Iran conflict. And as you know by now, if you're paying attention to the markets and politics, you know that there's always a very direct correlation right now with geopolitical events and what happens in the stock market. So something, good news happens about war or trade talks, that makes everything come up. Bad news happens, that tanks things. And you know this if you've been paying attention. So basically, Israel and Iran are fighting each other. That's not good for the stock market. And everybody was wanting to know what the United States was going to do, what Trump was going to do. And so yesterday, market was closed, Juneteenth holiday. So nobody was doing anything, nobody was trading. And Trump says, well, I'll know what I'm going to do within a couple of weeks. Even though that's not really saying anything very consequential or concrete, that alone was enough to overnight, right before the start of the day today, bring things up. So there's my good luck. I had some good luck, and it could have just as easily gone the other way, and Trump could have made some comment that's like, oh, it's not looking good, I don't know, I see bad things on the horizon, whatever. He could have said anything, and it could have sent the markets tanking. And then I would have been on the wrong side of the luck. But he said, I'm going to know something in a week or so. We're going to figure it out. So people were like, yay, and price comes up. So there's the luck. Now the skill comes into play as the market opens up. And this sort of dovetails into a thing that I've been talking about in the last few videos that I've made, where levels are super important. It's really, I think, the levels and identifying valid support and resistance levels, one of the most important things you can look at on a chart. It's price action with the candles, the 1-minute candles, and it's identifying trends, and it's levels. And so this morning, what I did, and the reason why I did what I did, and what that is I added to my position in the very opening minute of the day today. I added 10 contracts onto my AMD position immediately. And I did that because I saw a very particular specific thing playing out on the charts. And I'll get into that when we do the screen share here in a second. But so here's where the skill part matches with the luck part. When I saw what I saw this morning, I said, this is most likely going to happen. Now remember, it's never a if-then type of situation. It's always a if probably type of situation. So I saw things setting up on the charts this morning, and I said to myself, this thing happened, so probably the next thing that's going to happen is this. And then that thing that I predicted absolutely did happen, and I just capitalized on it. And, you know, I made $1,400 in 10 minutes. And so that brings us to another part of this video that I wanted to sort of hit home for you guys, is that you don't have to be in a trade all day long. You can make all of your money very, very quickly in the course of the day if you recognize trends and you just stay on top of the trends, and you never think to yourself, oh, this is going to go all day, or I'm just going to carry it out for, you know, days at a time. No, you don't want to do that. You want to take advantage of the gifts that you're being given as they are being given to you. And so this morning, I thought a thing was going to happen. It did happen. And then I took advantage of what I thought was going to happen and got my profits. I didn't stay in too long, because when you stay in too long, you will lose your profits. And, you know, all you got to do is look at any day, basically. I mean, almost every day is like this. It's very, very rare that you'll see a day where we just go up and up and up all day long, or down all day long. Almost always big peaks and valleys. And lately this has been exaggerated, as you know, if you're paying attention. Big peaks and valleys, really wild upticks, wild downswings, back and forth all day long. So if you time it correctly and you get in at the right time, right as we're starting to make a move and reverse, you know, it's very important to peel off your contracts, close your position as the move is going in your favor, because you know that move is not going to last forever. You might have 10 minutes, 15 minutes. If you're lucky, maybe you'll get an hour out of it, but you're probably not going to have an all day long move in either direction. So now I'm gonna go into a real quick screen share, talk about exactly what I saw on AMD today. And I'm going to focus on the high and low of day. And I'm also going to talk about the standard deviation, which is something that I've been paying more attention to lately than I used to. In the past, I would look at this indicator occasionally, but I didn't really look at it all that often. Right now, with the kind of big picture situation that the market is in, I'm looking at standard deviation all the time now. And it's definitely helped me out and sort of letting me know whether a thing is really strong or really weak, or if we're about to have a reversal. And so I'll explain that when we do the screen share right now. Okay, here we are taking a look at AMD. You can see that we are still in the middle of the day. I'm recording this at 1:45 p.m. Central Standard Time, so day is still unfolding as I speak. But this right here is where my $1,400 in 10 minutes came from. But the point of this right now is to talk about how did I know to get in with the confidence that I had at the very first minute of the day. A couple reasons. So first of all, let's take a look over here on the left. This is Wednesday. So remember, yesterday there was no trading, Juneteenth holiday. This was Wednesday. So as you can see, for the better part of the second half of the day after this little pop that we got in earlier in the morning, we basically fell out all day long. And as you can see, the 1 minute candles price was just bouncing off of the 200 EMA. As I've said here a million times, 200 EMA is a huge part of my strategy. I always take it into consideration with every move that I make. And so, it's obvious, like it's not looking good on Wednesday. But like I said, I had a couple of contracts that I held open because, I thought that there would be a good chance that we were going to come back. I didn't think that this was going to last forever, because this was all going on in the middle of, the worst of the Iran-Israel conflict talk and people wondering, what the US was going to do about it. And like I said in the intro, I was the beneficiary of some good luck as far as statements made by the administration. So when we opened up earlier this morning, it was a bit of a positive tone. And what I always like to do is I always take this more zoomed out approach before the market opens up so I can see like a bigger picture. I don't ever want to be like super zoomed in on pre-market, because the more important thing is to see the bigger picture. And if you look at the bigger picture, meaning everything from like midday here to right here before we open, you can see a very obvious U shape happening here. I mean, we were playing below the 200 EMA. And then as soon as we opened up early in pre-market this morning, we were essentially on top of the 200 EMA. And so then that brings us to right before the open and what I was saying about the importance of the 10 minutes before the open into like the first 10 minutes of the actual day, why that's so important. So let me zoom in and we can get to kind of the real meat of it right here. So one thing that you're not seeing here, because this changes, is the standard deviation. So standard deviation will change all the time. So if I put the standard deviation indicator up right now, it's not going to look like the way it looked when we actually opened up this morning. And when we actually opened up this morning, the 2 standard deviation to the upside was right here, basically just bunched up right next to yesterday or Wednesday's high of day indicator. And so that told me one really important thing. When price was sitting right on the 2 above standard deviation indicator at the very open this morning, it told me that one of 2 things was going to happen. Either we were going to quickly reject that price level and price would fall immediately, or that was a sign of strength and we were going to pop up above it if we immediately shot up above yesterday's high of day and shot up above the 2 standard deviation indicator. That told me that we were going to be strong, at least for a short period of time. One thing that I want you to pay attention to right here, this is really the heart of it, is literally like the 2 minutes before the open and then the 2 minutes after the open. We see this nice green candle at 8:27 pop up, fall, get this little red doji sitting right underneath yesterday's high of day. And then the first minute of the day today, we pop up above it, which was also above 2 standard deviation at the beginning of the day. And so I'm going to put up for a second here my actual ins and outs so you can take a look at everything that I actually did. I'm putting this up now. And as you can see this at 8:30:07, so literally 7 seconds into the day today, I added to my position that I had held open since Wednesday of 10 contracts on AMD, because I saw this gigantic green volume candle combined with the fact that we popped up above previous day's high of day, combined with the fact that we had popped up above the 2 standard deviation, combined with the fact that our faster moving average had crossed up above our slower moving average. Now, I've got a number of different views that I like to use, but this one right here is the 13 exponential moving average, and then this is the 50 exponential moving average. So I do like to use this one quite a bit now. And so right here, the 13 confidently came up above the 50 and it just sort of extended its run up above it. And then last but not least, we see the RSI. We get into overbought territory here on the RSI. And so what this tells me is that this is definitely not going to last forever. Like, I mean, it's just not. Like, it's really, really obvious that when we get up into this territory right here, this is not sustainable. You are never going to see price up above the 80 line on the RSI all day. It just will not happen. So what that's saying to me is it's time to start peeling out my contracts, because I'm making money all the way up and making good money very quickly. But I know it's not going to last forever. So I want to peel out my positions fast. So if you go back to my individual ins and outs, you can see that by 8:31, I'm already starting to sell contract. I bought 10, added into my position 10 contracts right here, which made my overall size, I think, 15 contracts. And by the very next minute, I had started peeling them off, and I had closed them all the way up until right here, which is 8:37, which is my last close of AMD. So $1,400 made between 8:30 and 8:37, like 7 minutes to make all that money. And it's only because the price was, like, the move was so forceful. And, you know, I didn't trade greedy. I mean, I traded the way you're supposed to trade, which is when you see this happening, you know that this is not sustainable. You know this isn't sustainable. You know that you're making money with this. So of course, you need to be closing your positions as it's making this run up. Now, I wouldn't say that I closed my last contract at the perfect moment. I would say the perfect moment would have been 5 minutes later here at 8:42 on this giant green candle. But this was absolutely the last of your really solid upwards move, because we're just going sideways after 8:42. So I was very nearly at the perfect moment to get out my final contract, because I mean, this is really the heart of it right here. Even the very next minute, you know, by the time we get into like 8:38, we've got a red candle, we've got another red candle, another red candle, another red candle. Whereas over here, you've only got one barely red doji candle at 8:33. Everything else is just super hard push to the upside. And, you know, so all of this happened simply because I took a look at the few minutes before the open. I combined the price action with the bigger picture that I had seen. Remember, when you zoom out, you take a look at pre-market, you look at the end of the day from the day before, and what happens over pre-market. We've got this nice U shape happening. We combine that with the fact that we came up above yesterday's high of day, and at that point we had jumped up above 2 standard deviation. And, you know, if it was going to be weak, or if it was going to reverse, it would have bounced off of that 2 standard deviation and reversed, and it didn't. Instead, it just rocketed up and just kept going. And so that's how you can really focus on the first couple of minutes before and the first couple of minutes after the open of the day to increase your day trading profits. All right, I hope that all made sense, and I hope you learned a little something from that. Like I was saying before at the beginning of the video, you can make all of your money very, very quickly if you can just jump in, identify when a move is about to happen, get in, take advantage of most of the move, get out before the move stalls out on you. That's where you make your profit. Now, you'll notice one more thing that I wanted to mention before I go today. You don't need to take my word for it. You can just look at the charts yourself. You will see that frequently you'll get a move in one direction that's like the first 15 minutes to half hour of the day, and then you'll get a move in the other direction after the first 15 minutes to half hour of the day. And so what that means is the best practices for trading at the beginning of the open in the day one of two things. Either get in immediately, like within the first couple of minutes, if you do see something that you think is relevant and you think is actually the beginning of a legitimate move, get in immediately. Don't wait, like first couple of minutes. You can do that and try to get out your entire position within 15 minutes to a half hour when you see that move start to fail on you. So that's number one. Or the second option that you can do, which is a little bit more conservative and a little bit more like risk averse for people. If you want to like see like a trend developing before you even get in the day, the second thing you can do is wait until after that initial move happens and then get in when you see an actual reversal happen. So a lot of times what will happen is market will open up, we pop up for the first 15, 20 minutes or so, then we fall out. And that is the second most reliable way to do it, is wait until you see that first little pop kind of lose steam and then get in the other way. So get in short. Or if it's the other direction, if we had gapped up before market opens up and we immediately fall out, like everybody's taking profits and the market falls out within the first 15 minutes or so, you wait and you stay out completely, and then you get in on the reverse going the other direction. So you'll get in long after we've had that initial fall for the day and you see something start to turn around and come back to the upside. So those are the two main early day approaches that I like to use. I will always do one of those two things. I will always either get in almost immediately, or I will wait until at least like 15 minutes into the open and get in then when I've seen a like pattern, a trend start to emerge. So as always, if you like what you just seen, check out the rest of the videos on my channel here. I've got a lot of free education, free information that mostly goes over real trades that I've taken. I'm a real money trader. This is not paper trading. It's not hypothetical stuff. This is my own real money that I trade with every single day. And most of the videos on this YouTube channel are showing you the results of my real money trading. And this is the only job that I have. I do this full time, work about 5 hours per week doing this because I'm usually very focused on the markets like the first hour of the day every day. And that's usually about all the time that I spend paying attention to it outside of making these videos whenever there's something new and interesting to talk about. So last but not least, before I go, if you want to do even more and go beyond all of the stuff that's on my channel here, you can always get my course or read my books. I actually have 2 courses and 2 books. The books are available on Amazon.com. My video courses are available on my website, which is lonewolftradingclub.com. I think that either my books or my courses can definitely help you out if you've been having any difficulties in trading, or you're experiencing mental blocks, or just like having issues with confidence or issues with not knowing how to identify where an actual trend is, or having problems identifying how to read candlestick patterns or identify what the candlesticks mean, any of that stuff. I think that my courses can do a great job in helping you out. So go ahead and pick those up if you want. And until next time, good luck with everybody. Hope you're all staying safe, and trade smart, but don't trade scared. Like, there's a difference between being smart and being scared. You do want to be smart. You don't want to be scared. So till next time, good luck everybody. I'll see you soon. Bye-bye.